If you want to learn how to trade using the 714 method or to navigate the Forex market, this video is for you. So please like and subscribe to the channel for more content like this. Alright traders, let's get started. So now here we're looking at gold on the 5 minutes time frame. So it's very important for you to scale down to the 5 minutes time frame because this is a scalping strategy. So you want to make sure that you can see the structure clearly and that you can get in and out of the market as quickly as possible. So now the first thing is to scale down to the 5 minutes time frame. And now secondly, you want to make sure that you change your time zone to UTC plus 2. This is the South African Standard Time, UTC plus 2, right? So now you are on the 5 minutes time frame and also your time zone is on UTC plus 2, right? So now here on the chart, this was my previous analysis using my own variation of the 714 method. As you can see here at the top, this is the resistance zone, right? I use the support and resistance zone to enter the market, right? So here you can see at the top, this is the resistance zone. So here you can see this was our previous high, right? So we used our previous high as the resistance zone and then we entered around here, and as you can see, price dropped to the downside. But now what is important is to observe price from 1 p.m. So as you can see down here, this vertical line is exactly at 1 p.m, right? And from 1 p.m, we see that price pushed to the upside, right? From here, we see a push to the upside. So when price pushes to the upside from 1 p.m, we are going to look for selling opportunities, right? And then we look to the left. On the left side here, we have this previous high right here, and we mark it as our resistance zone. As you can see, we entered right here and price dropped to the downside. So normally I target the previous low, right? So this down here was going to be my target. So now here's another important point right here, okay? So we have another high which is at the top here. We have another high. So just to make sure that you also accommodate this top high right here, you want to make sure that your stop loss is above this previous high. Simply because sometimes the market would spike up and then continue to your direction, right? So we want to avoid the market taking us out of the trade and then continuing with our anticipated direction, right? So now, as you can see, this was a very successful trade, right? So but then now let's go to the original 714 method. Let's start by removing our previous analysis. Let's clean our chart like this, right? Right. So now our chart is clean. We only have the vertical line at 1 p.m. So as you know, we need another vertical line at exactly 2 p.m, right? So we look for 2 p.m, there it is. So now we have our two vertical lines, one at 1 p.m. and another vertical line at exactly 2 p.m, right? And again, we also observe from 1 p.m. So now what you can do for yourself is to focus on the last candle before 1 p.m. You can see that the last candle before 1 p.m. is bullish, right? So since the last candle before 1 p.m. is bullish, it means it closed above, right? So this means that the 1 p.m. candlestick opened here, right? So this is exactly where we are going to place our opening price line, right? So now you can see we have the one vertical line, we also have the two vertical line and our opening price line. So again, we are going to observe from 1 p.m. to 2 p.m. what exactly happened between 1 p.m. to 2 p.m.? We see that price was bullish from 1 p.m. to 2 p.m., right? And again, when price is bullish between 1 p.m. and 2 p.m., we are looking for selling opportunities. So now, with the original version of the 7-on-4 method, you can either enter immediately here at 2 o'clock, just like this. So at 2 p.m. right here, you can actually enter a sell, enter yet maybe this low right here, right? So now, why are we entering right here? We're entering a sell right here because price is bullish from 1 p.m. to 2 p.m. So now we want to sell the reversal to the downside, right? So you have two options. Either you enter at exactly 2 p.m. or you wait for price to get to your opening price line, right? So now the second entry will be here. The second entry will be around the opening line, right? Second entry will be around the opening line. And you can remember, guys, this is a scalping strategy, so you don't need to hold your trades for too long. So now your second entry can be down here at the opening price line, right? Because this now confirms that price is going to the downside. So now if you entered right here, you can see that price actually dropped to the downside and you could have made some profit right here. So either you entered at 2 p.m. or you entered at the opening price line, right? And as you can see right here, everything went well. Okay, so but then let me tell you this, guys, it's not every day where you are going to get clean setups like this, right? It's not every day. So the market changes every day, the market evolves, right? But in this specific example, we see that price dropped and then started pushing again to the upside, right? So now here's the thing. When price get to this opening price line and push above, right? So this is another chance for you to enter. You can either enter right here, but as I said, guys, the market evolves, the market changes, but your opening price line acts as more like the support and resistance, right? So that's why when price breaks the opening line right here, you start to sell, because this is a confirmation that price is going to the downside. And then sometimes price might reject from here and then start to show some signs of weakness, right? So when price start to show some signs of weakness, you can also enter a continuation from somewhere around here. Okay, let me try to clean this chart. Right, so if price shows some sign of weakness right here, failing to break below the opening price line, you can actually enter a buy, which is a continuation of the uptrend. The reason why I say it's a continuation is because price went up, came down, and then going up again. So this is a continuation because we are continuing to the upside. So hence I'm saying that the market is, you're not going to get the same setups every day, guys. You're not going to get the same setups every day, so you also need to be smart. Look at the market, look at price action, what's happening in the market, and then react, react to what the market is doing. Problem with most traders is that you don't want to backtest. You only want to be handed over, whether it's a strategy, you want the best winning strategy. You need to backtest, guys. Backtest. No one is going to do that for you. You have to do it yourself. You need to backtest. Backtest on different dates. See what works and what does not work, right? So for example, with the 7-on-4 method, I looked at the 7-on-4 method and then I modified the strategy. I added the support and resistance, and it's working for me. It's working for me and I'm happy. So you also need to backtest, see what is happening, see what works, what does not work. make changes. If you want to add SMC to the 714 method, add SMC. If you want to add order block, fair value gaps, as long as it works for you, back test, guys, back test. Alright traders, so I know this may seem confusing, but if you continue to back test on your own, these things are going to become second nature to you. They're going to become natural. Alright traders, this is it for me. I know that we only did one example in this episode, but we're still going to do more examples in the future. So please like and subscribe to the channel for more content like this. See you in the next video.